Hello everyone, so today is March 1st, which means we're going to see how our Roth IRA portfolio on Robinhood did in February 2026. So we can see that we're currently at $24,883.94. That's about trading flat for the last market day, overnight down a little bit. If we look at the week, trading about flat on the week, down 2% in a month, and then 3% about flat. Year to date, about flat. It's pretty close to 3 months. 1 year, we're still up 19%. And all time since we moved over to Robinhood, we are up 29%. Now, this does kind of give an overall theme to what I've been saying in the last two videos that the market has been finally slowing down a little bit because it's just been up and to the right consistently for about 2 years now. You can see for the last 3 months, we're about trading even. You can see this incredible growth that we got to experience. Saw a lot of gains, especially in the aftermath of the tariff day where we release all of our tariffs. We're down to about 18,000. We adjust our deposits. Now we're up to almost 25,000. So not at all-time high in this portfolio by any means, but we still had a great position nonetheless. We're trading about at all-time highs. We're just about 3% off of that. So great position nonetheless. We can look down our contributions. We've been pretty steady. We're still putting 2025 in until you can't max it out. And we're at 3,700 for the year. So we got a couple weeks. We'll probably end up around that 5,000 mark. We'll see if we have the spare funds to make up that difference. Maybe not this year, but next year does seem like a potential first year to max out the Roth IRA contributions. But we have our IRA match from Robinhood for $111. Now, with this in mind, we're going to go and look at the software that I've made to look at our portfolio, see how it does, some of the metrics, and then also go over stock news. This is Aurora Financial Pros, the software I made, and this is what we're going to use today to look at our portfolio and then look at some stock news as well. So we can see currently we got some upcoming dividend payments next month, which is exciting. It's the next quarter. We got about $28 coming from VU and $19 coming from QQQM. So between that, about $47 worth of dividend payments, which is incredible. I remember when that amount was not nearly that large. I get maybe 10 bucks and I was super excited. $47 a quarter, we're almost at $200 a year. So that's pretty incredible to me. If we look at our dashboard here, you see at the last day we traded down a little bit. QQQM, although it was down, performed a little better than the general market, which we are checking with VU. You can see our total values getting pretty close at 25,000. We've traded above it several times now, kind of hovering at it. Our cost in the portfolio at this time is $18,291, which would be $6,669 in our open positions. We have a little more profit because we traded positions in the past. That's a 36% return what we currently got, and then we can see, yeah, annual dividend income $187. So that's pretty good. We like to see that. You can see that we got a slightly higher than market beta, so hopefully we'll capitalize on a little more volatility to see higher gains. Diversification, pretty solid. I mean, we're definitely a little sector heavy in terms of QQQM being really high on tech, but we do have, top 100 stocks and top 500 stocks, so we're pretty diversified. Dividend yield of 0.74% weighted average, and then QQQM is our largest holding in this position. You see, some people go with a three fund portfolio. I just got two funds here. I like this setup a little bit. Maybe we'll experiment more in the future when we're looking to diversify a little better. But QQQM, we're looking at a 60 to 40 split compared to VU. That's pretty much where we're at. We're at 60.1% on QQQM and 39.9% on VU. So we're doing pretty nice on that. And then we see down here, we're going to get into some news articles for the day. So the first thing we're going to talk about is Paramount buying Warner Bros., which is pretty incredible. And that just comes from the fact, I think it's Paramount Skydance. I think it's interesting because it seems like Paramount wasn't going to win the buy, and that Netflix was seemingly the winner because they just had the pockets, and if Paramount retaliated with a price, that Netflix was just going to beat them. But we can see if we look at the last trading day that they were up 20% because they won the bid to buy Warner Bros. Discovery. So they get a lot of assets with that. We can see if we're pulling any news articles from it. Yep. On Friday announced a deal to acquire Warner Bros. Discover after a bidding war with Netflix. Yep, Netflix walked away from the bid. And then, yeah, So it's pretty straightforward. It's just an acquisition, and of course, it's going to have to go through courts, large companies being acquired. But it does seem that Paramount is probably the only other company willing to get in the streaming game with Netflix. Netflix more or less has won the streaming wars, but Paramount said, "Hey, we're going to still go after this. We think there's a future for us in streaming, and in order to do that, we can't let Netflix just buy up Warner Bros. Because Netflix is the leading company." And I mean, if you see over the year, they're up about 22%. So if we don't count that Netflix gain, they were trading about even. They were actually trading a little bit down from 1 year ago from today. So that is interesting. It seems like maybe it's changed the perspective on the company a little bit. Now, interesting, you'd think that in a deal that only one company or the other would be benefiting, but you will see at the same exact time, Netflix jumped up in share price. They jumped up 6% in news that Paramount was buying the company that they were buying for. So you look at 1 year, Netflix trading about even. 5 years, they've done pretty incredible, 76%. Um, so that's pretty good. Underperforming the general market a little bit, but point being that Netflix, especially in the last year or two, has been a pretty good buy. But now the reason that Netflix jumped in price specifically, we can see if the news is picking up on it here. Yeah, I'm not sure if it's going to pick up on it, but it's the fact that Paramount has to pay Netflix about $3 billion just for the fact that they broke up the deal between Netflix and Paramount. So that's kind of where that jump is coming from because it's just a direct basic contribution to Netflix's market price. So it's interesting. Normally in a deal, either one company or the other is the winning company, and then one suffers, the other one gains. But in this case, it seems to be a win-win for all. Netflix got their payout, Paramount got the acquisition, and then Warner Bros gets to sell off their assets, and people get to retire or be acquired by Discovery, which maybe will be a little more competitive. So that's a pretty interesting news article I found this month. It was very popular. Everyone couldn't seem to stop talking about it. Yeah, and then now we're going to get over to Nvidia. So Nvidia exceeded earnings in their last earnings report, which let's see if it's up here yet, if it's updated. I don't think it might be on here yet. But they did report that they recently outperformed on earnings. And despite that, Nvidia dropped on share price. So it was interesting that, and it's kind of the story of Nvidia that they can do great on earnings. They can beat earnings, but they have to be exceptional. They have to beat earnings by a large margin in order to outperform, which is something that we kind of been seeing in the tech industry as a whole. So it's something to keep an eye on. That maybe expectations are just getting kind of high up there for some of these companies, and they have to be able to meet those expectations. So let's see the next article that I want to talk about today. Meta announces a high capital expenditure plan, and this just gets back into AI data centers. So you can see, and let's see the 1 day how they kind of trade about even. But they were actually down quite a bit, and then they announced that they were just kind of tripling down. And it seems like the stock actually more or less reacted well to that news, despite the fact that in general people aren't really big fans of seeing large companies invest further into AI, considering it's just been very expensive and we haven't been seeing the benefits of it necessarily. Let's see what else we got here. Oh yeah, and then Black. This was an interesting one. I don't know if they're trading under Black anymore. Check trading under Square, I think. Let's see if SQ returns anything. So yeah, I forget what they're trading under. I don't think. Let's see. Yeah, I don't think so. But point being that Black, which was formerly Square, or Square, which was formerly Black, they cut about 4,000 of their current employees to make an AI play, basically. And then in light of that, their stock actually jumped. People like to see it because less overhead, trying to be more efficient with the system. The reason I bring this up is because it kind of rings true to everyone's fear about AI layoffs being kind of widespread and what that means for the economy. But it does come down to the fact that the stock market is independent of the economy. The economy can do well, and at the same time, the stock market can do bad, or the stock market can do good while the economy is not doing so good. So that was a very interesting story. And now we've gone over these news articles, let's kind of jump in to see our history of contributions into this portfolio, how it benchmarks compared to the S&P. Okay, in this part, we're going to see how our portfolio has done compared to the S&P. So over here we have some nice charts. Red is contributions we've made into our investments. Green is a balance, and then this light blue line is what the SPY value would have been if we bought SPY instead of the purchase we were making. You can see that we are outperforming slightly here. So you can see it's kind of going down a bit, but in December we were outperforming by $700. Now we're outperforming about half of that, 376. This kind of rings true to I don't know, AI kind of being a pullback for a lot of tech stocks and tech stocks being hammered a little bit. So a lot of that growth being kind of stunted from what happened in the past. But we can see that our profit in the portfolio remains pretty high. I mean, we hit at $9,140 in February, but we've pulled back about $400 from that this month. So that's why we're trading even, but still about $9,000 profit, which is great considering our portfolio value. And then, yeah, we talk about our positions here. If you want to see any specific numbers, here's a nice breakdown. Some of the buys we had in the past. And then we also had a little bit of our prediction market going on here. This Paramount's going to be a bit of a wash, so minus $4 taking off this, about half our profits. But nonetheless, we don't really have too many more active trades going on here. So thank you for tuning in this video. I really appreciate it. Make sure to share with your friends. Make sure to ask questions in the comments. I'd love to answer them and tune into the next video. Thank you.